going on, guys? This is the Investors Channels with your host right here, Prince Dykes. I was getting caught up in a little traffic, and if you ever been to Hawaii, you know how the traffic gets and stuff. So instead of sitting out in the traffic, I thought I'd come by the beach. You can see the nice little lovely beach out here and stuff like that. Little scenery down here in Hawaii. So I thought I'd say, hey, you know what? Sorry if you hear planes over flying, and I usually keep my camera stuff in my car, but I grabbed the wrong bag. So hey, you know what? I'm using my phone. I said, hey, how about I pull over, sit by the beach, and relax a little bit and talk to you guys. But anyway, I don't have a lot of time, and I definitely know you guys don't have a lot of time, so I'm going to jump straight into the topic. As you guys can already see, the name of this video is going to be, what if 2008 market crash happened tomorrow? What if that happened tomorrow? All the stocks that you hold, your portfolio, your mutual funds, your ETFs, your TSP, your 401k, your Roth IRA, your house, your home, everything. Ask yourself that question. What if 2008 happens tomorrow? I'm sorry if you hear a plane flying over. Anybody in Hawaii, downtown is where the airport is. So hopefully it's not too bad. But anyway, what if it happened tomorrow, right? What if 2008 came in? How would it look on your portfolio, right? Go back and take a look at last 2008. What happened to the S&P 500? What happened to a lot of those stocks? What happened to the bonds? What happened to the real estate industry? What happened to the automobile industry? All that stuff. So a lot of people are saying, hey, I'm diversified. But okay, let's say you're diversified across four industries like retail and fast food and what else is out there? Commodities and real estate or something. You go back and look in 2008, all of those industries crashed. Not necessarily crashed, but they had a significant decline, except your commodities, gold, because when the market goes down, gold goes up. But the part that fourth that went up, that 25% that went up, did it cover the loss of everything else? You lost 75% of your portfolio is declining, but you got 25% that is strong. Is that 25% enough to cover the 75% that is down? You gotta ask yourself that. Ask yourself, how am I protecting myself? What is the way that if 2008 was to happen tomorrow, I wouldn't lose everything? Think about it, right? You can go back, look at the chart. Back in 2008, when you see the S&P 500, which is the benchmark for finance, when you started to see it fall off in 2008, it didn't get back to that point again until 2013. That's 5 years that passed where the market was down and just to get the recovery that it had lost. So that means you have to go 5 years without making anything, that you're investing and hoping that it comes up. And what if 2008 happens right when you're getting ready to retire? My arm is getting a little tired, so gotta rest a little bit. But what if 2008 happened right when you're getting ready to retire, right? Say if you were supposed to retire in 2010. Say if you were supposed to retire in 2012 and your portfolio takes a massive hit like that. How can you protect yourself? What do you have in place to stop that from happening? Look at all your mutual funds. How did they perform in 2008? Right? Ask yourself. These are things that a lot of people don't think about, because when do people buy stock? I always talk about this. People buy stuff when it's assets. People buy stuff when it's doing good. Right now, since 2013, you've seen since about the last 4 or 5 years, you've seen an upward trend. You've seen the bull come into the market. People are making money. People are seeing other people make money, so they want to get into the market. Maybe this is the place to go. Maybe this is what I want to do. But ask yourself, what if 2008 happens tomorrow? Because what goes up must come down. When everybody's buying, you should be thinking about selling. When everybody's selling, like in 2008, that was the time to buy. That was when I started investing. So I had the chance to see the market go down. I see the chance to see the market go towards its peak. So the thing about it, as I see people always inbox me, hey, what stocks to get? I'm getting photobombed by a beach bomb. Pretty good. But anyway, people always ask me, what's the best stock to buy? What is this to buy? And stuff like that. And I always ask myself in the back of my head, man, yes, these are good stocks right now. But when the crash comes, because it's not a question of if the market's going to crash, it's when. And when the crash comes, is this person going to be able to get out of this, or the person, do they have anything in play to help them and prevent them from taking massive losses? Because let me give you guys a scenario. Take out a piece of paper. I don't know if you guys hear me on your phone, on your way to work, or whatever you're doing. Watch me on your desktop. It's pretty funny, huh? Anyway, watch me on your desktop. Whatever you're doing, pull out a piece of paper. We want to write some down. Let's take two people. Take person A, and we're going to take person B. You don't need paper to do it. You can listen to me, and you can probably visualize what I'm saying, right? So we're going to take person A, right? Person A, we're going to cover 3 years. Person A, the first year, he lost 50%. The second year, he made 50%. The last year, he made 25%. What is his average return? You know, most people say, hey, he lost 50, he made 50, he got left with 25, up 25%, right? Okay, cool. Let's go to person B. First year, he made 0. Second year, he made 10%. Third year, he made another 10%, right? What would be his average return? You would say, okay, he made 10 the second year, he made 10 the third year, 20. So out of person A and person B, who made the better investment? People will say, okay, well, person A, he made 25%. Person B only made 20%, right? Cool. Average returns, right? Now we're going to look at the real growth returns, real returns. Now let's go back to that scenario and let's put money into play. Person A has $1,000. Person B has $1,000. Person A has $1,000. First year he lost 50%. How much does he have? $500. Second year he made 50%. How much money does he have? $750. Third year he made 25%. How much money does he have? I want to say it's $900 and something or whatever, right? Wow, he started with $1,000. 3 years later, he actually lost. Remember, you thought he made 25%, but actually he lost about 6%. Now let's add into inflation because the price of everything goes up. So he actually lost money over those 3 years, right? Because look at that massive loss that he took in the first year. Now let's go to person B. First year, made 0. So he had to start with $1,000. He has $1,000 now. Second year, he makes 10%. Boom, he has $1,100. Third year, he makes another 10%. Boom, now he has $1,210. Wow, he made 21% when you thought he made 20. He really made, in real returns, he made 21%. Person A actually lost 6%. Why, you ask? Because person A did not take the massive losses, like they're going to enjoy the beach too. Person A did not take, the person B did not take the massive losses that person A took, right? So that's a golden point there, that it's not always about riding the wave when everything is hot. Because he made 50% the second year, but it's the losses that kill people. And I always ask people, what if 2008 happened tomorrow? So that's the thing to think about. Hey, Prince, what are some things out there? For prime example, you guys been hearing me say for over the past year, you logged into this channel, I've been saying gold, gold, gold. People will run to gold when the market goes down. Another thing you guys may want to look at is annuities. On top of that, I am a life insurance agent and a healthcare and an accident insurance agent as well. So I do know some things about annuities that I'm going to discuss further later on, all the good stuff like that. So, but anyway, I wanted you guys to ask yourself, log into your E-Trade, call your broker, look at your accounts, and say, what if 2008 happens tomorrow? But anyway, it's the sun's kind of setting a little bit. I guess I'm going to run and head back. So get ready to head home, upload this video. Until the next video, thank you guys for tuning into the Investors channel. Be safe. I'm out. Peace.